Recap of the US 100. 2 are outcome, full target at 3 are not achieved, but we'll get into that as to why in this recap. Okay, let's get into this. So what we'll do is we'll rewind to the point where we had the opening box complete, which was at 10 a.m. And we'll have a recap of what we talked about at the start of the day. So at 9 a.m., I begin my analysis. So at 9 a.m. over here, it's the open of the New York session. Close of London, we have a high and a low for both London and Asia. And in the main, I'm concentrating on the day itself, Asia, London, and New York. I have a series of playbook schematics that assess how are each session aligned, and do we have, in this case, a continuation, makings of a continuation schematic. And yes, we do. If you look at Asia, we have the Asian box, we have the London box, and we have New York putting in a fresh high, maintaining above the London low. That therefore equates to prospects of an upside continuation for the New York session. Keep this color coded. All right, so there we have the Asian session. We have the London session dumping down into the New York session, therefore creating prospects of an impulse, correction, continuation. Okay, this is a simple continuation schematic. Then, on a wider scale, if we zoom out, we have a peak formation high in the week, coupled with a peak formation low. We have a coil in between the high and the low. It's going to go one way or the other. It could just go sideways. There's only 3 things that markets do. It could go sideways, continue up, or break down. What did the last thing the market do? The last thing the market did, what was the last thing the market did? I can't speak English. It dumped and then broke back above the low from Tuesday. That is bullish. Okay, so we're in a bullish context. When we come into trade, we have a bullish context. We have a scenario where we came back inside of Tuesday's lows, bullish, and then as we're trading, as we're getting into our trade, we're even above Wednesday's highs. So we've got a fake out low of Tuesday coupled with a breakout of Wednesday. So that's our daily chart bullish, aligned with our weekly chart bullish. Okay, because we are above last week's highs. Bullish, we're breaking out. So we're in a bullish context, aligning with the overall bullish trend. We have a bullish weekly chart. We have a bullish monthly chart. Just let this load up. A bullish monthly chart. Okay, so bullish monthly, weekly, and daily. Okay. So when I come into trade, I'm trading with the trend. And then what we're doing? We're waiting for our setup. Okay, so we've got our thesis in place. We've got our targets, which are 100% range expansion of the box initially. I mean, this could go to a 200% range expansion. That's well within the means of the ATR. The average true range of the day is round about 310 points. Okay, so even though I've got out the trade, that's not to say that this can't keep going for the rest of the day. And if we measure the range of the day from low to 300 and something 10 points, that takes us up into our 200% range expansion target, just shy of it, 310 points. But obviously the ATR is just an average, so there's nothing exact. Doesn't mean it has to do it either, but it's just a gauge, a guide. In any case, I don't want to sit here holding on to the trade. I like to be in and out and get on with the rest of my day. Yes, I could set a stop loss, but this could easily fold down as well. Let's get to that in a moment. But let's do it now. So my initial target is a 3R to 100% because I don't want to hold on because we're overextended on the monthly and the weekly and the sessions. We've got 3 consecutive sessions breaking out, 3 consecutive weeks, 3 consecutive months. All of that would lean somewhat bearish, and that's overextended. Okay, it's not to say that it has to correct, but it could do. That there is a possibility. There's quite a high possibility that it could. So I'd rather just take what the market gives me and not gamble against other possibilities. Okay. So that's my target for 3. Okay, so I haven't got my trade set yet because it depends on the price action. But I'm leaving that there just because I don't want to toy with that because that helps with my illustration. But at this point, I don't even know if I'm going to trade long. I need a setup confirmed. At the moment, we have a reversal because the market's broken out. This is on replay mode, by the way. So the market has broken out of the London highs, as you can see, and then tucked back in. So that's bearish. So what I need is a break of the London highs, as well as a breakout of the opening range highs, so 9:30 to 10 a.m. Now, at this point here, to some extent, I could be looking to take that trade long. I could be. But I don't quite have as much conviction because I don't have a fake out low as of yet. What I want is a fake out low. So I want to see this market trap traders short. This could be a trapping traders long, only to come back inside. So I'm being cautious and I have my timings. My timings are at 10 a.m. off the cuff, but I didn't have the coil and breakout that I wanted at 10 a.m. So I'm cautious, and good job I didn't take it because that was a trap and now it comes back inside. Now it's an actual sell setup. Okay, but that's not my thesis. My thesis is that it's a parabolic day to the upside in line with the bigger picture, which I've just illustrated before. So I'm waiting patiently. We get a retest of the 20 EMA, and we also get a retest of the session VWAPs. Today's VWAP from New York and also the London VWAP. Today's London VWAP support. So I've got conviction here that we're breaking out now to the upside. But I'm not going to take that just yet. I could have done. It was at timings. All right. But I just wanted conviction that this again wasn't a fake out to the upside. And I really want to see this market start to roll over through the highs of the 10 a.m. breakout. So I'm just being patient. And at this point here, as we start to break through these highs, I'm getting in. Okay, it's now or never. And we've got a 15-minute fake out low, a series of them, in fact, one down here at the open. And then we get this another one here. And then we get this continuation breakout candle. And that's leading me to get in on the trade as we start to move through. On the 1 minute chart, that might be a bit clearer. If we come out of the replay mode, you'll see actually where I'm getting in. So at 10.45, we get this nice bullish switch bar, and I'm getting in on that as I see the market start to roll through the highs, and off we go. And then as we approach my target, we clip the previous week's highs. I don't need to scroll left because I've got it all on my chart in current view, but sorry, bear with me. That's not the previous week's highs. We clip a 300% range expansion is what I meant to say. We clip a 300% range expansion of the 300% range expansion of the lows from Asia and the highs of Asia. So we come into that area, at least it's not quite exact, and we start to tail off. So rightly or wrongly, I start coming off there, and I just take that. I move my stop loss to 2R, and that's what got done. Okay, so I hope that helps in terms of explaining the NAS trade.